Lesetja Kganyago says talks with Treasury on a revised inflation target are ongoing and believes a consensus will be reached. Now, this follows criticism from Finance Minister Inokoto after the bank signaled a preference for anchoring inflation closer to 3%. Speaking at SUB's 105th annual meeting, Kganyago stressed the relationship between the two remains strong and he's confident they'll reach agreement. Meanwhile, the bank recently cut rates to 7% and markets are now pricing in high chances of another 25 basis point cut by year end, with further easing likely over the next 12 months. Let's listen in on key insights from Governor Kganyago's address at the 105th annual general meeting.
Reform momentum underway, which is best illustrated by improved electricity availability. We see some scope for better growth in the coming years. We also believe National Treasury's efforts to stabilize debt can bolster confidence. In addition, the economy is enjoying some support from lower interest rates, with the yield curve shifting lower over the past year or so, and our policy rate down by 125 basis points since September 2024. Like almost all other economies, we suffered high inflation during the global inflation surge of 2022 and 2023. However, inflation decelerated sharply in 2024. We have had space to ease rates because inflation has been well contained, with prices up 3% over the past 12 months. There have been notable risks to prices this year, such as the spike in oil prices after the bombing of Iran in June and the sharp depreciation of the rand back in April. But these risks have been resolved quite rapidly, and inflation has remained moderate. Looking ahead, inflation is expected to rise over the next few months. Food inflation has picked up, mainly because of meat prices. Fuel prices are also falling more slowly now compared to the recent past. However, we expect this uptick in headline inflation to be temporary, and we look forward to inflation coming back to around 3% over the medium term, which is at the bottom of our 3 to 6% target range. To the extent that inflation settles at 3% and the inflation expectations continue their move lower, the bank's forecasting model shows lower interest rates if inflation remains contained at current